Hey traders, June 20th, Friday. Going to do an update for this week and for the week of 22nd through the 27th. And with that said, as you can see, just going sideways now for almost a month. So, what does that mean? Well, it means that this is still a massive bull pennant, and even with all the geopolitical noise, we when you look at days with this red candle on the 13th, it rinsed out 1, 2, 3, 4, the 5-day range. So, but we've pretty much held the bottom of that 5-day range for this week. So we did wick below it yesterday, but then bounced back up. So we took out the daily low and then we took out the daily high today. So we are just in a straight across range market right now. With that being said, we'll see what happens in the next couple of weeks with, again, geopolitical events. But from a technical standpoint, we're holding this 20 moving average. We'll see what happens, but the trend is long. Trend is always long. I keep saying that. You just got to buy the dips. Sometimes they're larger than others. But on a Fibonacci scale, I talk about this a lot too. This 61.8%. I'm going to adjust that down a little bit. And how it acts as a pretty substantial support line in bullish trend trade, whether it's monthly, weekly, daily, intraday. So, and then if we look at, activity at the close, it sold off, but instead of like going down at the end of the day, it just basically, 20-point move, trickle down sideways all day, was made up in 5 minutes. So the market obviously is just sort of like, it's just going sideways. It doesn't want to get too far extended one way or the other. So levels, what's that mean for levels next week? So we have RSI still holding at 50 on the daily. So I suspect we're going to get a dip below 50 on the daily RSI, and we might get some volatility from the Israeli-Iran situation, where we get a wick down and it takes out, here we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We have 11-day range in here. So this measured move is 59.77 to 61.27, about 150-point move. If that happens, we could see a wick down. Okay. Anyway, the measured move would be this 61.29 to 6,000, 130-point move. So 6,000 minus 130 would be about 58.70. Okay, and that lines up with our SBO zone in here. Support to breakout, I call it. So for some reason, if there's a major, like, you know, look for this 58.91 area, 58.68 to 58.88. This range in here will be a bounce zone, and you'll get something like this, like a big bottom tail. Similar to what we got back in here, similar to what you get here, here, these big wicks. They just rinse all the weak longs out. So let's look at this on a weekly basis. So we're already seeing that we wicked below last week, but then we're closing, like a full 50 points. What do we call it? 60.25. So we closed, yeah, full 1% higher from the low that we wicked below for the weekly. On the weekly 8 and 20 moving average, that previous level I was just talking about, if we do, it's perfectly in that buy zone between the 8 and the 20, and the weekly 8 has crossed the 20. So that's a massively bullish sign on any chart. Whether if this was a 1 minute chart and the 8 had crossed the 20, you'd be like, okay, we're definitely long. And you'd be looking to buy pullbacks on the 21 EMA moving average for a 1 minute chart, with your stop being this 57.85 area. So that's again what we're looking for. If we get a big rinse, we're looking for a bounce here. Everybody will go, oh my gosh, oh my gosh. But no, it's just a buying opportunity. So look for your buys for the weekly area here down in this 58.80 area. Again, 58.68 to 58.88. 58.68 to 58.88. That's our major volatility rip down, oh my goodness, bounce area. Okay, trading back to 60-minute chart. Okay. So the market has been repeatedly just like on fire in the morning, and then if you miss it, it's just been a sell fade, and then it pulls it all back up. So with that being said, I've got a fib set here from that daily that I just talked about, and we're holding that 61.8%. I'm going to shrink this fib down to this candle. This candle here, 59.05, that was back at, oh, look at that, just right at the end of May. So we'll just do this like a monthly. This will be the monthly candle. And we can see that yesterday's low is right down in here. So it's respecting this. And then, so I would not be surprised if we see a push above that 60.74 to take out those 2 days, but we end up with some volatility between these 3 days. And then lastly, we will just look at the 60-20 moving average as being support and a major magnet. Okay, trade them well.